Hello everyone, Happy New Year and welcome to the Daily Analysis for January 2nd, 2013. Today, guys, we're going to cover obviously our major pairs, and what I want to talk about today is this idea of the market being overextended because, as I'm watching this yen, I'm inspired by the idea that there's really no such thing as overextension in the market because, there's really no limit to where it can go. And so I want to talk about a few areas that would typically be considered overextended, but really you never know how high the market can go there. And so, my theory is that just because the market is going up 100 pips or 1,000 pips or 10,000 pips does not mean that it's ready to be short, because that's not valid logic for taking a trade in the other direction just because it's gone too far, and I put too in air quotes because there's really no such thing as too far. So that's one of the things I want to hammer in this new year and with this first daily analysis of 2013, and I hope it's helpful to you guys. Before we get into that, I'm going to cover the news and take a quick look at our terms, and then we'll jump right back into the charts. Alright guys, and tomorrow we do have a good bit of New York session news. That is the unemployment, the non-farm employment change, and also unemployment claims, which are both major red tagged events. And then at 2 p.m. we also have FOMC meeting, which is another big one. So there's three red tagged USD events between 8:30 and 2 p.m. all of which could have a very major effect in the market. So, we still expect liquidity to be lighter than usual in the first week of January, which means that these announcements can have an even larger effect than normal. So you definitely want to keep your eye on those three announcements, especially if you have any trades in play. Okay? Alright guys, and we just want to quickly cover our terms, which basically just point out that we're not registered or qualified to provide investment advice. And any investments you make to risk your money should be made with your own and a financial advisor's opinion, not our opinion. Okay, so it's important to understand that because the government is very strict about these type of regulations, and we want to be very clear on what our stance is. Okay, and with that said, we'll go ahead and move over into the charts now. Okay guys, so I'm going to start again with the US yen and just point out, all of the yen pairs look similar to this, but you can just see the movement pretty much straight up from the US yen. When we had this rally not that long ago, it seemed like people were going crazy, but you can see that this rally really dwarfs this one in the amount of movement that it's taken and really how fast it's got there as well. So really an incredible move that we see here. Now again, the main thing I want to point out by looking at this, of course there is some levels to watch, and there could be a great reversal sign, but what I really want to illustrate is the idea that many people will say, okay, we're ready for a short here because the market is overextended. And of course, I understand the basic logic behind that is that typically the market does not go in one direction and only that direction for such amount of time. Typically, it pulls back and then continues and pulls back and then continues, and normally the pullbacks are of significant size. But there are certainly times in the market where, just because it's overextended doesn't mean it's going to stop. And those are normally the times where people trying to short, bullish momentum are really getting crushed. And obviously, all of these yen crosses is a perfect example of that. And to kind of illustrate exactly what I'm saying, I'm going to do something that I don't typically do, and I'm actually going to use an indicator for an example here. Okay, so you can see I have the Williams percent indicator there at the bottom of my screen, which is basically there to determine when the currency is overbought or oversold. So if it goes above this -20 area, that typically means that it's overbought and it's ready to be sold. And if it goes below the -80, that means it is oversold and ready to be bought. Well, you can see that we actually get our overbought. It crosses to the overbought right here, which means that at this point the Williams indicator is saying that it's ready for selling action and it is overbought. And obviously you can see that since that point all it did was go straight up, and so now we've had price floating basically in here. You can see it dip down for a second, though I'm not sure why, because it really didn't pull back very much. But basically from that point it's just been hanging in this area that's considered overbought the whole time it's there. And a very similar example again on this rally previous, where price was just overbought for several weeks. And so my, the reason I'm saying this, the reason I'm going through this, is just to illustrate that, you can't really have an overbought currency. There's no, rule of thumb that exists that says the U.S. yen can't go up to 88 and then go up to 90 and then go up to 91 and then go up to 98 and then go up to 110. There's nothing that really makes that impossible for the market. So the trading logic that says just because price is overextended means that I'm ready to short it is not good trading logic, and that's one of the reasons that we at Winner's Edge really do try to use price action as our main indicator and look for the reversal patterns to appear rather than just saying, okay, it's too high, we're ready to short now. And so as the new year's coming around and we're thinking about resolutions and all those type of things, one of the things I want to do is make sure that I'm always using actual sound logic and price action in my trading, and not just using deductive reasoning that's that basic, like, oh, it's too high, it's ready to be shorted, because that is the way that oftentimes we make big mistakes in our trading and end up costing ourselves money. Okay, so that's the US yen, just an example there again that I wanted to point out. You can feel free to, of course, disagree with me, and I'd love to get your feedback if you do trade in that fashion. But I, for one, think that that is, not thorough enough logic to be making trades and risking your money on. Okay, let's move over to some other pairs. I'll get off my my soapbox about overextended here. Alright guys, next up I have the Euro-Dollar daily chart. By the way, it's about 3:45 p.m. Eastern time here, so we're not far off from these daily bar closes, just in case you're wondering on that. You can see that we're still in this little range after we broke out. Obviously the breakout of the 132 area was a pretty strong breakout, but we haven't seen any type of continuation since then, as we're ranging right between 132 and 133. You can see the tops here do correspond with the previous breakout, which is interesting because last time we broke this level, it corresponded right at 133 and then really crashed hard way below that level. So we'll see if there's something similar in store for the Euro-Dollar. You can see the reversal signs are are starting right now. However, we're still definitely sitting on a solid base of support. So again, and I know that I've said this basically since this channel started, and it's rather boring, but unfortunately it's about waiting until we see a clear break and clear movement before trying to force a trade. Forcing trades is always a disaster waiting to happen, because you end up making trades, again, like I was saying before, that are not on sound logic. So let's wait for a break here, make sure that we have good price action, signals and great profit potential, and then go ahead and look for our trades on the Euro-Dollar. Until then, I would just draw your little box around the range here, make sure you know where the range is, and go ahead and wait for it to get out of there, and pay attention to other pairs in the meantime. Alright guys, another great thing that we have developing here is the pound-dollar potential. Now, obviously with any situation there's two potentials. One is that we could break lower and have a great sell opportunity. The other is that we could break above 163 for the first time in a while and have a great long opportunity, and both are very valid. What's interesting here is that we have this kind of perfect V pattern here. You can see that we got up to this resistance level, we crashed, we built a base, and we went back up, and now there's this V pattern that's formed here. But if you look a little bit longer, it's actually, we have an M pattern. It starts a little farther back that goes up, and it could be a very potential M pattern rather than a V pattern. And so obviously that would lead to the possibility of a short and moving all the way down to 158 or even lower if it completes that M pattern. That's possible. Now, right now it's still sitting above this little trend line. Obviously this trend line was broke, so it lost some validity. But still, you can see that the trend line has been tested a lot of times, and so I wouldn't be trading against it at this point. But if we get a close below this trend line and a continuation, any type of momentum we see in the market could really lead to a nice fall in the pound dollar. You saw that the Euro-Dollar also had a great reversal sign. Now, of course, one of the issues is when you have a move like this where it moves down then moves right back up, within this move you create a lot of resistance and support areas. Of course, as it's going down, we're talking about support. So a level right here is a pretty strong support, even the one right here that it's getting close to already. And then you have some points like this right in the middle that have been tested quite a bit. So within this move down and back up, we've created a lot of levels that now price has to crush on its way back down which certainly makes it a little more difficult to to make that smooth move to the downside. On the other hand, going up, there's not a lot of recent resistance because price has not been this high in a long time. I'm of the opinion that recent support and resistance is more powerful than old support and resistance, and also of the opinion that weekly and monthly resistance is more powerful than hourly and lower, 4-hour, hourly, and lower. So it's kind of interesting. At first it kind of looks like it's oxymoronic that weekly and monthly could be stronger, but also more recent is stronger. But really the logic is simply this, that if you have a weekly or a monthly point that has been tested recently, that's a very strong level, and stronger in my opinion than a weekly or monthly that has not been tested in a very long time. Now, along with that, if you have a major daily level that's been tested in the past few weeks, I think that has a lot of validity in current price. So it kind of depends on how you break it down. Obviously, there's a lot of different people's opinions on support and resistance, and certainly I think if there's a major weekly level that's been, that stood the test of time but has not been tested in 6 months or something like that, of course I still think that has major validity and is something to be concerned with. But on a very general basis, I think two things to look for are looking for long-term resistance and support areas, and also recent support and resistance areas. And so with this recent move, again, this V pattern down and then back up, we have a lot of recent support and resistance clusters that could be quite an issue if this thing does want to move down. Even if it does proceed all the way down to 158 and even lower through that level to complete that M pattern again, it's very likely going to struggle in almost every one of these areas and take a long time to get there, which is frustrating as a trader if you have a long-term target. Okay, so a lot of different potential there. I talked a lot about what could happen, obviously, and what's more interesting is what will happen. If I knew that, I would be a lot richer than I am. But we can only wait and see what price action determines and try to take advantage of it. And at this point, it looks like this trend line is in this cluster, and where they meet here in this little wedge pattern is really what to watch out for. And a break of either direction could certainly give us some trade potential. Okay, guys, so pound dollar, an opportunity in both directions certainly, and a lot of areas to watch out for on the way down if we do get some continuation of that bearish momentum. Speaking of reversals in the market, you can see that the euro pound had a massive reversal. I actually tweeted this on Twitter as it was first happening a while ago, and was showing that the momentum that was picking up just on an hourly chart. And you can see the incredible follow through on the euro pound as this thing has gone down. This bearish bar, which was the 31st of December, is really one of the larger bearish bars that I can see on this euro pound chart. So a pretty huge move. An attempt to retest this level, didn't get quite to the top of the level, but certainly retested back into the zone here today, and now also reversing back down. So it appears to me this trend line is going to be at least tested, and it'll be interesting certainly to see if there's enough momentum here to even break this level and perhaps put an end to this upward move. I typically am of the belief that a trend this long on the euro pound that has been this consistent is bound to continue outside of some major reversal news and fundamental changes. So I'm still pretty bullish on the euro pound despite the fact that it's showing reversal signs right now. So that's my opinion, but obviously if price action tells me differently, then I'll have to adapt that mindset. But right now, I'm thinking that there's a high probability of a test of this trend line, and perhaps even a break and a test of like maybe some of these lower support levels, but then a great bounce back up to make higher highs is really my personal opinion on the market. So I'm actually waiting for buys in the euro pound right now. I'm waiting for price to get a little lower, give me a better price, and then show great reversal signals back to the upside rather than obviously the reversal to the downside. So we'll see if this level continues to come into play. This recent move down didn't really struggle much with it, as you can see, but on the way back up, that's one of the issues you'll have with picking your target, is that you'll have to worry about this major cluster in the 8150 area. So again, that's euro pound, and it has some potential. One major level to worry about there, and then also the trend line and seeing how that comes into play. All right, let's move on to the US dollar, Canadian dollar. And actually, pretty similarly to the euro pound, you can see that the USD CAD is showing a strong reversal and kind of testing this upward move of late. And so obviously what we'll be waiting for here is a bullish sign to see if we can try to continue and get this upward trend back into shape. Now, it is still upward, it is still bullish based on the reversal that happened down here in September. But obviously, it's been heading down now for quite some time because all the way back in the middle of November, we had this reversal sign right off the 50 Fibonacci level. And since then, we've actually had a lot more bearish movement than bullish. So even though it is considered a recent uptrend since this point, there's a lot of bearish momentum here to worry about. And so just, if we get a bullish move off of this trend line, I'm still not really going to be convinced that it's going up to make a new high and break through the 50 and come all the way up to 1015. I'm going to have to see a little more than that. So for me, the USD CAD might not be the best trade potential because I'm not confident in taking a trade right off the line, which means that I'm not going to get the best price. And so if I'm not going to get the best price, it's probably a better option for me to sit that one out and look for a chart that I am a little more confident in and can get a great price. And so that's one of the things you have to keep in mind about trading is there's a balance between not taking a trade when it's going against you and taking it too rashly, but also not waiting and waiting and waiting for everything to follow through and continue until you have no profit potential left in the trade. And so if you find that balance, you'll be a lot better off in terms of your profitability as a trader. And so that might be a situation on the USD CAD for me personally that I would need too much follow through that by the time I got enough, I would have no profit potential on the trade, and therefore better for me to sit that out, wait a couple weeks, see if there's a new setup or maybe even a bearish setup rather than a bullish setup, in which case I'd find a lot more confidence in the trade. Okay, so that's USD Canadian on the daily chart. Let's move along here. Now another thing that's also reversing in toward a trend line is the Euro odd. So kind of continuing this theme with bearish reversal momentum, but really upward trend lines to think about. And so the Euro odd, very strong reversal again for the past 2 days, and heading down towards this upward trend line that we started to form, in the recent months. And so we have this line that's intact, but really another thing that we have intact is the current level where it's at right now. You can see that here we have a test, here's a test, here, and now we're right at there. And along with that, we also have the 50 fib actually right at this recent swing. So you can see that the 50 corresponds again with this packed in point of resistance, and so there's a good chance that this could actually bounce right here before it even gets into our trend line. And so be aware of that, because a lot of times we're waiting for our level. We want it to come to our level, but unfortunately the charts don't really listen to us. They do what they want to do at the levels that they want to do that action at. So if it's going to pull back to right here and take a nice continuation move to the upside, we don't want to miss that just because we were waiting for our specific level when there is a nice level intact right at this point. So certainly it could break right through and come down to our trend line, but if we start seeing some bullish momentum and some reversal signs, you might want to think about jumping on earlier to make sure that you don't miss a move if it does come up and make a higher high up toward 129 or wherever it may go. We do have another point right here around 128, 128.28 actually, which could be a major level. So certainly some bullish potential here, and then again, especially down lower. And we'll definitely keep those levels in mind. We'll see if tomorrow we have a big bullish candle pushing up toward higher highs. Could very well be a situation. Alright guys, and I will finish up with the odd US today. One interesting thing with the odd is that we have both the uptrend and the downtrend in play, and that's something I pointed out for a while now. Is it makes it interesting when you have the uptrend and the downtrend both in play, because you kind of have this wedge, this long-term wedge, in this case that's building up. And so the question is, of course, which trend is going to hold up longer? Is the uptrend going to last and it's going to break to the upside? Or is the downtrend going to last and it's going to continue to the downside? Because one of them has to be broken at some point, which obviously we saw happened right here. And so the first break was a very slight break to the upside, which didn't last long. But then we had a very nice break to the downside. And to me, that was pretty good confirmation that the actual longer-term downtrend, because the downtrend is much longer term than the recent up move, was in fact going to be the trend that was respected. Well, recently, obviously, with the the dollar weakness that we've seen, the odd has shot up again to test this trend line. And so for me, this means one of two things, and they're pretty obvious things that anyone would assume, and that is that it's either going to break up with this new momentum, or this is a perfect retest, for continuation to the downside. And I don't think you need me to tell you that now that it's gone up, it can either go up or down. That's pretty basic. But one thing that I would keep in mind is that this trend line is continuing to move down with a very long-term momentum behind it, and we also do have some correspondence with this level. So to me, this is a great short setup if we do have some reversal signal, some price action signal. A break to the upside, in my opinion, is not as valid because, again, a break to the upside could just mean that it breaks up and then continues actually going down just on the top of the trend line rather than the bottom of the trend line, which is of course no good if you're looking to take buys. So in my opinion, we have a good option here for a short, and it's just about seeing if there's some price action to go along with it and take advantage of that. And so that's what I'm looking at right now on the odd dollar. I think that this long-term downtrend is a great sign for us. It's a great thing to be able to take advantage of. All we need is for price action to back up that assumption, and obviously for there to be some momentum behind it to push us into some nice pips. Okay, so that's what I'm really waiting for on the odd. I think it could be a great potential setup, and it's a matter of waiting for time to show us and for price action to show us if that's indeed going to be the case. Again, this is one of those situations where because price has been in this range for so long, or in this area, there's a lot of support and resistance built up. So if you're looking to take a long-term short, you're going to have to be very patient as it moves through these support and resistance levels and is really shaking out probably the majority of people who are on the right side of the market. Okay, so that's the analysis for today, our first 2013 daily analysis. I certainly hope it was helpful and informative for you, and I would appreciate any comments or thoughts or trade setups or disagreements or anything that you have. I would really appreciate those. Please go ahead and leave those below. Another thing that I wanted to encourage you to do is Casey posted an article a little bit ago called the 6 Best Forex Blogs, where he mentioned some blogs that we tend to follow and take a look at. And we just wanted to produce some interaction and see what other people are looking at. So I'm actually going to put a link below the video, and I'd really love it if you wouldn't mind going and looking at those blogs and making sure that you vote for which blog you think is best. And if you really want to get involved, tweet it and share it on Facebook just to get some exposure out. These are really great Forex traders who are taking their time to share information, and they do what we do, which we greatly respect. So we want to make sure that we give them some exposure and share them on Facebook and Twitter, and again, make sure you vote and pick which one you think is best. Okay, so that link will be below, and I appreciate you guys' time, and I'll talk to you very soon.